give some perspective on a token versus a cryptocurrency. Imagine you had a pipeline company, and the pipeline company charges the oil company X dollars per barrel to move the oil through the pipeline, right? And then all of a sudden their dollar has been printed too much, and the pipeline company says, you know what, I can't charge you in dollars anymore because inflation is too high, right? So the pipeline company says, I'm going to create my own token called the pipeline token. You now need to pay me in pipeline tokens in order to move your barrel of oil. And now sometimes the oil company doesn't need to use the pipeline, and a water company needs to use it, or a natural gas company needs to use a pipeline. So all of technology, they've created their own currency, similarly to how a pipeline company would create their own token, right? That currency is a natural hedge against any inflation or fiat. And so that is truly a cryptocurrency. Now, in terms of the token, a token is the asset that moves on the blockchain, right? So GoldPesa is a token built on the Ethereum blockchain currently, and that gives you a clear definition of truly what a cryptocurrency is. And when you buy Ethereum, you're betting on the fact that other companies need that Ethereum to move their asset and use that network.
Since we are in this region giving an oil pipeline example is very good idea. Yeah. Everybody's talking about DeFi, decentralized finance. What are the biggest advantages of DeFi?
Right, so, you know, it's interesting, right? Because if you think about banking and you think about from a retail perspective, you know, generally the general functions are a transfer. Whether you're depositing, you're withdrawing the money, whether you're transferring to somebody, it really comes down to just a transfer, right? There are other sides of banking, of course, but just the 99% of the functionality from a user's perspective, right? So if you think about it, you don't need big buildings and you don't need a lot of staff to fulfill a function, which is to simply transfer the money or transfer the asset. Now, money can be an asset, it could be a real estate, it could be anything, right? And so if you think about DeFi and we talk about ERC20, you know, we hear it all the time, ERC20 or BEP20, they're all really, it really comes down to 5 functions. And those are the 5 functions that are coded into a smart contract, which effectively fulfills the simple function of transferring an asset. And this is what DeFi is about. You don't need to go through a centralized body to transfer your asset. It's a simple thing about approving and transfer from. These are the 3 functions that are mainly in the ERC20 code. And so I think that this is one major aspect to DeFi. Another thing that I wanted to shed light on, which I think is very, very underrated, is liquidity pools and automatic market making. So when you launch a new asset on the NASDAQ or the New York Stock Exchange, the hardest part for a new company is to generate enough liquidity in order to make sure that customers feel comfortable that they'll sell their asset and somebody's there to buy it, which is the order book model, right? You've got a buyer and a seller, they meet at a price. Usually you need big banks to underwrite you, and it's a big problem for small companies. So with DeFi, and you look at Uniswap version 2, PancakeSwap, some of you guys might have bought tokens on these decentralized exchanges. Effectively, what they do is something called automatic market making. And instead of having an order book where a buyer and seller agree at a certain price, you have a liquidity pool. And a liquidity pool is like a Forex bureau. A Forex bureau has dirhams and it has dollars. Depending on how much reserves are inside of the Forex bureau, that Forex bureau will price the value of one relative to the other, right? And so this is what DeFi uses. These liquidity pools use a fixed product formula in order to come up with the price depending on the reserves that are in the Forex bureau, quote unquote. Now, if you take this Forex bureau and you put it on the blockchain and give it a set of rules in a smart contract, now that becomes automatic market making. So for example, if we had 10 million GPO tokens and we put $1 million into a liquidity pool, Uniswap will say, okay, the price of your token is 1 million divided by 10, which is 10 cents. Now, if the market comes to the liquidity pool and exchanges their GPO for dollars and vice versa, eventually, if you take all of the GPO out from the pool, the price hits infinity. And if you put all the GPO back into the pool, the price goes back down to 10 cents. So one of the things that I want to shed light on is automatic market making is good, but it causes these crazy volatility that you see when people are dumping these things, right, in these low cap kind of tokens. And so, you know, something that we've built at GoldPesa is I've coded a very custom liquidity code. And to keep it simple, what we do is we utilize Uniswap version 3, which allows us to concentrate our liquidity in a range. And to really simplify this, all it means is that if I needed $100 million before to launch my token or my asset or whatever I'm building, I only need 1/10 of that or 100th of that now. And it basically, what that means is it gives the stability in the price as people are buying and selling from our liquidity pool. And my code rebalances this liquidity in a range such that it creates the highest level of efficiency for those dollars that are placed in the pool.
Can you tell us a little about Triomnia and the pawn?
Right, so yeah, as you may have seen, the pawn is the name of the code that is behind the GoldPesa token. So, you know, in my third year of university, I was coding voice recognition software. And I couldn't help but notice that when you say a sound into a microphone, and you see it on an oscilloscope, it's a noisy sound, right? But somehow Siri and all of this software can break down that analog sound into its digital counterpart, and it's able to determine what you've said, right? And so from our perspective, we look at it as a big noise. But if you really break down that noise into a spectrum of sine waves, you're able to determine what I've said, and that's what voice recognition is. So from that day onwards, the next 20 years of my research has been on applying principles of voice recognition, which is digital signal processing, to the markets. It was a hobby of mine, and a hobby turned into a business, and we set up Triomnia, a boutique quant firm, a really, really smart team together, and the pawn has some merit, and it's built on the back of principles of DSP. And what's important about this is that we believe in cycles and how to quantify cycles. And that topic is very broad, and I think it's really important to have something so universal because we don't know what the future holds. I think a lot of quant firms have the ability to trick themselves into believing they have something when they don't. And I think predicting the future and the ability to not be fooled by randomness is going to be the secret to a firm that actually lasts. And to be able to predict something that's never happened with the limited data we have is truly, I think, where our strength comes in.
Okay, thanks, Shamik. Last question is, if I want to invest, is it easy to invest, GoldPesa, and recommendations?
Yeah, so right now on app.goldpesa.com, you can buy the option. You connect your wallet. We've created our own decentralized exchange. In the back end, it's Uniswap. And we intend to be listed on Binance, as well as some of the centralized exchanges. And effectively, we're selling the call option right now. And if you own the call option, then you can buy the main token next year at spot price plus 1%.
Okay, thank you, Shamik, for these insights. And they have a stand outside if you want.